Good afternoon, and thank you for joining us for the FinTech Hub session. Across the week, Innotribe are looking to make sure that they highlight the amazing things that are happening around the world in different hubs. Yesterday, we looked at the Canadian hub, and today we will be looking at the APAC region.
My name is Janos. I'm the founder of SuperCharge. We're a FinTech accelerator based in Hong Kong and Malaysia, and I'll be mainly talking about Hong Kong to you today.
Good afternoon, ladies and gentlemen. My name is Mr. Akaradej Disyadej, Managing Director of Thai FinTech Association.
Afternoon, everyone. James Lloyd. I'm based in Hong Kong, and I cover Asia-Pacific region for EY from a FinTech perspective.
Hi, everyone. My name is Zennon Kapron. I'm the founder of Kapronasia. We are a market research and consulting firm focused on the financial industry in Asia, and also the co-founder of China FinTech. And I'm representing China and based out of Shanghai.
Hi everyone, my name is Danielle Szetho. I'm the founding CEO of FinTech Australia, the National Association of FinTech in Australia, and I will be representing Australia.
What are the unique strengths that each of your hubs actually offer, and moving past the hype cycle of FinTech, which started a number of years ago, to what has actually tangibly happened? And so if you have some examples, that would be great. Do you want to start, Danielle?
Yeah, sure. So I think I'll talk about collaboration through two lenses. The first would probably be internal. So FinTech Australia, given that we do represent the startup side of the community, we operate in an interesting environment in Australia where it's effectively a highly oligopolic structure. We've got the four major banks and then a very big gap between them and the second tier banks. I mean, the four major banks in Australia effectively hold 80% market share. So the FinTech community has actually come from quite far way behind, but actually the biggest collaboration we have in the space has traditionally actually been with both Federal Treasury and the regulator. We have extremely strong governmental support, both, and it's quite bipartisan, which is quite unique in Australia. And as a result, we've actually managed to pass quite a number of FinTech-friendly regulations through Parliament. So actually sitting here now, it's a bit busy because we do have finally the GST cryptocurrency legislation passing through, private company legislation for crowdfunding. Of course, there was the guidance that ASIC released recently on ICOs, which was done, we had a conversation with them prior, talking to them about the sorts of things the community would like to see. And certainly a very responsive regulator, both from ASIC's part as well as the government. So, things like the regulatory sandbox, the commitment to an open banking regime in 2018, these are all things that have been done through close collaboration with the FinTech community, but also with close consultation with the banking community as well. Then looking at that, continuing on that theme of sort of inter-community collaboration, I would say actually Australia is really far behind when it comes to bank FinTech collaboration. The research piece we ran with EY last year sort of highlighted that it was probably, I think 41% of FinTech startups in Australia listed that as one of their largest external impediments to growth. They found it very challenging to collaborate with financial institutions, and that is, again, because of that very defensive oligopolic market structure. When it comes to external collaboration, so this is now the second area where we're looking at international collaboration, I would actually argue that ASIC has more reciprocal data sharing or information sharing agreements than any other regulator, perhaps except for maybe Singapore.
Yeah, MAS.
Yeah, but Kenya, Ontario, like you name it, they've got it. And they do share a lot of information, but it's two-way. A lot of countries do actually see ASIC as a very leading regulator when it comes to sort of sophisticated market regulation. And besides that, certainly we're seeing partnerships again as well when it comes to FinTech companies looking to expand in other countries. Some examples, for example, AirWallex is a great international SME remittance company, secured investment from Sequoia China. As part of that deal, also had investment from MasterCard and are using that obviously to expand through the Asia region. So they're really, really healthy signs. Of course, I'm certainly looking at things from a trade perspective as well, and I think Zennon will probably touch on this as well, really starting to see some very close relationships between Asia and its key trading partners being China and Singapore. So I think you'll expect to see a lot of movement in that particular area on the trade front, particularly as it comes to both regulatory harmonization as well as information sharing and cross-border partnerships.
Maybe you can comment on the sort of collaboration and partnership side from an investment perspective. So Sequoia China was mentioned quite a bit, Danielle, and money is global. So is it possible if you kind of comment a bit more about the partnerships or collaboration that are actually happening from an investment perspective at where money from China is actually going around the world.
But I think a lot of the fintech development is very domestically focused. And so when you have these VCs that have money to spend, there's a couple of different plays. You can play domestically, and you can invest in something that you believe is going to grow domestically. And a lot of that is already controlled by the big players, or you can look internationally. And so, I think Airwallex is definitely a cross-border play, but there's a lot of investment. The Ping An Voyager fund that's being set up now, they're not necessarily looking at something that, ideally it plays in China as well, but it may just be for those foreign markets, and there may not be that cross-border. So I think, money is either looking at a domestic play or going completely abroad to look at plays that are particular for other markets, if that makes sense.
The collaboration in Thailand is so simple and so common here. Actually, even though the fintech sector is very small, but the landscape are a lot of variety. We have payments, we have crowdfundings, ICO, etc. You can name it, right? In terms of collaboration, right, they might collaborate with each other in the same industry, Thailand markets. But on the other hand, they collaborate in the region as well. Just to give you an example, right, there's a product lately called Claim DI. It's an expression of you can claim yourself. It's a mobile application that you can you take that photo of your car accident, etc. This is a good collaboration that Thai FinTech have joined with Postbank in Singapore, right? And the other collaboration is one of the payment gateways that also Singapore as well that collaborate in Thailand. If you notice that there's a lot of collaborations here because, again, in Thailand there are requirements. For example, if you want to offer payment gateway in Thailand, you must have got approved first. So I think it's a good synergy in Thailand to having collaborations as such. Yeah, and then in terms of our local communities ourselves, right? We have private sectors, for example, telecom providers. They have provide incubations, accelerate, and joint venture capital as well. Yeah, that's give you a local scene of Thai FinTech.
So if you take collaboration, you bring it across Asia, you're going to have easy collaboration and you're going to have high friction in collaboration. So I think one of the things that we're not saying here when it comes to startups trying to collaborate outside is stuff around data residency, right? So how can you have two countries collaborating when data cannot move from one to the other? Then you're going to have regulators collaborating with each other, which is, yes, there's a lot of MOUs, but what's the output of that? And the reality is, even if you look at regulation, for the last 20 years, just getting securities regulators to work together on a market that we fully well understood took, decades. So I think those are the high friction collaboration. On the easy collaboration, I'll start on the academic side mainly because that's part of my hat. But this is already happening across Asia, right? So Australia, Hong Kong, and the University of Luxembourg is developing the world-leading research in fintech regulation, on regulatory technology. And that's happening why? Because it's thought leadership. It can be done cross-border in a pretty easy way. And Australia has a strong data element. Hong Kong has a good financial regulation element. And Luxembourg is essentially, very international. The other one is state of market. So South-South transfer is actually very interesting. China has more to share with Thailand than it would have to share with Hong Kong or would have to share with the UK. So state of market will allow for collaboration to happen between markets that are similar. I know we're going to talk about mobile payment and mobile, but Hong Kong telephone rate penetration is 100% and banking rate is 99%, versus China is going to be 60% on mobile on banking penetration, 100% on mobile, which is maybe more likely than what you have in Thailand.
Yeah.
And then you have e-commerce companies, right? Which those are the ones that can support that collaboration because sometimes they use non-financial data, meaning not subject to data regulation issues, and they power financial services on the back of non-financial data. So those Google, Amazon, GAFAs that you mentioned, or the BATs in China, maybe are going to be an easier cluster to create collaboration cross-border because from a financial perspective, it's actually pretty difficult for successful fintech company to go abroad.
The next question is really about the challenges. So it's really great to talk about the good things that are happening, but I think that in order to sort of look in the mirror and think about the challenges is also very key. So James, do you want to start with a perspective on what you think the main challenges have been in the APAC region?
No, I think it's a good point. I mean, I've yet to find anyone talk about how bad their fintech hub is. I mean, I think the way I think about challenges in respective markets is, frankly, what are we trying to achieve? And this is a challenge I often make to some of the regulators pushing certain initiatives in markets is, how do we know when we're successful? So everywhere wants to be a fintech hub, and I think you'll struggle to find any country or territory on earth at the moment that doesn't claim to be a fintech hub. But I think for me, it's when will we know we've been successful? Is it about creating employment? Is it about creating competition? So in the UK, as you know, there's very much a competition mandate from the regulators. That's not the case, frankly, in a Singapore or Thailand or arguably in China either. So I think for me, the challenges are, what are we trying to achieve? At a very simple level, I think the more entrepreneurs building, early stage, growth stage companies is itself a success factor. And on that basis, I do think there are considerable challenges, not least of which incumbents, as demonstrated by the continued success of Innotribe as part of Sybos, incumbents are waking up to the reality that in order for them to retain talent, in order for them to attract talent, they need to do more in this space. So perhaps one of the biggest challenges, I think, will be actually more and more people just saying, well, you know what, I did want to leave banking or I did want to leave insurance, but actually we've just built an accelerator, we've just built a lab, we're investing in all these exciting companies, so why don't I just sit still and do that?
I think in Asia alone, right, the challenge here is it's languages, local languages, right? Look at that. In terms of Asia, you have India, Japan, right, Thailand, Myanmar, whatever, that they use different languages. However, we are the people who kind of blend, the culture is very easy to cope up with, easy to be mingled with. That is kind of complementing each other. But however, I think the very important is its local regulatories. Singapore, they're quite relaxed, but in Thailand and some other countries, they are more conservative. They kind of hold back, lots of, approval, etc., right? But however, I think to be successful in order to be a fintech company, I think you must find a common needs, common platform. Yeah, because we are addicted to mobile phone. Everything what's on the mobile device already. I think the successful rate and adoption rates of user in Asia is very, very high. Yeah, if you can read this message and adopt yourself to be able to cope with these threats and challenges, you'll be successful.
And Janos, the challenges in Hong Kong?
So Hong Kong is actually a good example. I think two challenges. One is human capital, and the other one is startups. So if you take Hong Kong as an example, there is currently one university with a fintech undergraduate course, but what I'm getting at is, when it comes to fintech training of people, let's say Hong Kong can train 400 people a year, right? And let's say that Hong Kong hires 10,000 people a year in finance in general. Now, you need to make sure that those people have a level of understanding of what fintech is to some extent. Even if Hong Kong was to double its capacity of training people year on year, it would take Hong Kong 15 years to train enough people to get there. So I think human capital development and training is a critical element to have a healthy industry, which it's about education at scale, right? The second part, in my view, is startups. So one of the main challenges, there's not enough failed fintech startups in Asia. Or if you look at fintech in Hong Kong, 3 years ago, there were 140 startups. If you look at fintech in Hong Kong today, there's 160 startups. If you look at the two, they're still exactly the same, which is really a shame. A, it means that the defying statistic, more startups should actually die. A death rate of startups is 90% a year, right? So you have a lot of companies which are still surviving, which actually is a bad thing, because when you look at the quality of founders and teams, if those companies could fail and then join financial institution because you're an exhausted founder, or another startup because now you have a network, that would be hugely beneficial. So I think the startup death rate, because it's not high enough for some reason, either it's moral, either it's cultural, either it's family, either it's grant financing, doesn't matter. Startup death rate is not brutal enough. And as a result, I think this is preventing good people to join financial institution or join other startups. And I think that's the other main challenge.
So how do you all think that the mobile revolution and the way that mobile technology will impact fintech within your hubs will change over the next few years?
I suppose I have a slightly contrarian view on this, which is to say, clearly mobile penetration has taken off across the region, enables access to a whole range of services that were not otherwise accessible. But when it comes to financial services, in fact, you still need some level of KYC, AML, basic identification. And we talk about Vietnam. Yes, mobile penetration is very high, but bank account penetration is still relatively low. I mean, even just to take the China example, which is often used as the kind of mobile revolution, mobile payments, mobile everything, the reality is that Ant Financial, WeChat Pay, and others are in fact built on top of an 80% banking penetration rate. In fact, there's more debit cards per person in China per capita than anywhere else in the world. So they already have an existing underlying financial infrastructure upon which they've now built a mobile-first solution very successfully. But the ability to replicate that or transplant that to a market like Indonesia, for example, where you've got about 39% people have access to bank accounts, for that other 61% of people, it's not just a question of giving them a phone and now they have access to financial services, because there are clearly security and KYC implications in that.
And if you look at a debit card transaction in China, I mean, now we're chip and pin, but it inevitably is chip, pin, signature, which is extremely heavily friction. And I have my phone configured now. I just long press on my home key, and I get a QR code that I can pay. And so I think there's so many different angles around this. I think you brought up a good point about the banking penetration. I mean, that in China, the banks are there, but people can't get access to the funding. And in Thailand, maybe the banks aren't there, or the access to the banks isn't there, and there's a different set of problems. So I think, the mobile is certainly in many of these places. I mean, you look at the penetration. I know specifically for China, smartphones, 75% of the market. And if you look at PC ownership in the US versus China, the US PC ownership is just north of 80%. In China, it's around 50%. So the device of choice is the mobile phone, and that's where people are going.
Because it's cheaper, right? Cheaper and handheld device.